In this presentation, we will take a look at an internal control flowchart mapping out the processes and procedures related to internal controls. Starting off with the develop and understanding of internal controls by evaluating the design of controls, determining if the controls have been implemented. So that's the first thing we're going to do. We're going to say, hey, what are the internal controls? Could you give us the design of the internal controls? And then we want to determine whether or not the internal controls have been implemented. Next, we're going to document the understanding of the internal controls. So once we have that understanding, we, of course, as auditors gathering evidence, will then document that understanding. And then we come to the question point. That's what this red box then means. So we have a question, a yes or no type of question. Does the auditor intend to rely on the controls? So at this point, we have to say, do we rely on the controls or not? Now, if we're thinking about a publicly traded company, we will probably be saying, yes, we're going to rely on the internal controls. If we cannot rely on the controls, we're in big trouble because we typically can't do enough substantive testing in the time frame given to really support the full audit of a publicly traded company. However, if we have something less than a publicly traded company, it may well be the case that we don't intend to fully trust or rely on the internal controls, and therefore we're going to do more substantive testing. So remember, at this point, publicly traded company, are we gonna rely on the internal controls? We hope we can at this point, or else we're gonna have to take into consideration what we're gonna do going forward, whether or not we can basically finish the audit within the scope of it. If we're talking about a smaller company, we may say no, and in that case, we're gonna do more substantive testing. So you can imagine if we have a smaller company, we're gonna say, okay, this internal controls aren't something that we can completely rely on. What are we going to do then? We're going to do a substantive strategy, meaning we're going to set control risk at the max. We're going to say control risk is high, meaning there's a high risk that the internal controls set up by the organization, by the business, will not detect a material misstatement. And therefore, we need to do more testing on the substantive testing side. So what are we going to do? We're going to increase the amount of the substantive testing instead of wasting our time or going further thinking about testing the internal controls, which we've determined not to be sufficient and therefore not something that we rely on within our audit process. Therefore, instead of testing internal controls, we're going to go straight to what we would think of as the more kind of substantive test, the test of going right to the accounts in essence, and start to test assertions related to account balances and transactions. If we can rely on the controls, which again, we will have to, hopefully to some degree, for large organizations, publicly traded companies, then we're going to look at a reliance strategy, and we're going to plan and perform tests of controls. So if we're going to rely on the internal controls, what we're going to do then is then do further planning and testing related to the internal controls, because it should be easier to test the controls, the checks and balances in the system, as opposed to just trying to check the end result, all the transactions that are resulting from the checks and balances. So we're going to go in and basically check the checks and balances of the system, depend on it hopefully, and therefore, or be able to depend on it hopefully if we trust them, and then we can do less of the actual substantive testing. Set control risk based on the test of controls. So once we test the controls, then we'll set the control risk at that point in time. Then we're going to ask ourselves another question at that point in time. Does the achieved level of control risk support the planned level of control risk? So have whatever control risk we then set after looking at it, does that meet what we've decided on in terms of our planned control risk? And then if the answer is no, then we're going to revise the planned level of substantive testing. So in other words, if we have a reliance strategy, we're going to set the level of basically the control risk, and then we're going to do the testing, and if we have to make an adjustment, then we make an adjustment and we adjust then and revise the level of substantive procedures. So in other words, if we cannot, if the control risk is different than what we assess the control risk to be in the planning stage, we're going to account for that by revising the level of substantive testing on the account level and the assertion level, the transaction level, as opposed to on the checks and balances or internal control level. We'll document the level of control risk that we have determined to be, and then we'll perform the substantive procedures based on the level of assessed control risk. So obviously, once we set the control risk, then we can move on to the next stage and say, okay, now we can determine how much substantive testing we need to meet our objectives, go down to the ground floor, the actual kind of thing that most people probably think of within audit, is and actually dig into those accounts on the substantive level, going through accounts and transactions related to them. If, on the other hand, going back up to this red item, we asked this question, does the achieved level of control risk support the planned level of control risk? If the answer is yes, it does, then we're going to rely on those controls, and we'll go forward and go straight down to the perform substantive procedures based on level of assessed control risk that we have determined.